This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.
Well, good evening, everyone. This is AJ Monty, Chief Market Strategist with the Market Guys. It is 8 p.m. exactly on the nose on this Monday, and I have to ask you, how many of you were watching the markets for a good part of the day today? As we were down 400, we tried to bounce. We tested the lows, came up a little bit. How many of you, just by show of hands, you could use that hand icon there to raise your hand? Okay. Ken, John, Jim. Wow, a lot of you watching the market. I hope you weren't too stressed out. Well, by the time we're done here today, again, for those who are celebrating Thanksgiving here in the U.S., I think you're going to have a lot to be thankful for on Thursday. We have a lot of Canadians as well who listen in, and they celebrated their Thanksgiving last month. So look at this as a delayed Thanksgiving for those who are up in Canada, because there's a lot of good things going on the technical side. And there's a lot of news that came out today in the tech sector, especially NASDAQ stocks, the FANG stocks. Have you heard of that? That's a new acronym. You know, Facebook, Amazon, Netflix, Google, they have an acronym for those stocks, and they got pounced today. And so what I'm going to do is go through my regular market recap and looking at the general markets. And for those of you who are new to the open house, and I see a lot of you who are newbies, understand that you will have an opportunity to type in your stock symbols, but don't do that until I ask for them, because they tend to get washed out through the Q&A box, and I want to make sure we cover as many as we can. Last month, we didn't run out of stock symbols. We just ran out of time. So I keep the market analysis part short so we can make sure we get everyone's stock symbols and we don't run out of time like we did last week. I want to be able to get everyone's stock symbols. So let's look at the VIX first, because the VIX is a leading indicator for the S&P. It's inversely related. And this line here is what I drew last week for the VIX. And that was my forecast, and we hit that spot on. And this line right here, let me back out a little bit because you can't even see the bottom there. This line is what I drew last Friday for the VIX. And I was expecting the VIX to go lower, which in turn would bring the S&P higher. Now, that's not what happened today, but understand this is a shortened trading week. And on my weekly market report, for those of you who were paying attention to that, I mentioned specifically to the option traders that last Friday was options expiration Friday. And whether you trade options or not, it's important for you to understand that the week that follows options expiration Friday, which is this week, is the most volatile week of the month. Now, when you combine that with a shortened trading week and throw Thanksgiving holiday into the mix with Black Friday numbers coming out on Friday and Cyber Monday numbers coming out on a week from today, there's no telling what could happen here. For those of you who take vacations during this week, because maybe you have Thursday and Friday off from the office, a lot of other people do that. And what happens is they step away from the market. I'm talking the investors who go on vacation. They step away from the market. And what happens is the volumes tend to drop because so many people go on vacation, and the fund managers who stick around, the money managers, the hedge fund managers who stick around, have their way with the market. They can actually, a lot of these funds have enough money to push certain stocks around, and they do. They generally push them in favor of their own positions. If you want to call that manipulation, go right ahead. Call it whatever you want. They push the markets around. And I've seen it happen on the professional side as a trader. I continue to see it happening, and it puts people on edge. I mean, let's face it, we are emotional beings who put a lot of hard work into saving and investing and planning for our retirement or college funds or, family expenses and such. And when that money is threatened because of the added volatility, what happens? Well, if you're a human being like all of us, you're going to get stressed out. So with that said, let me read the charts here for you, because if you have some insight into the charts, you can more or less predict the markets, and that should relieve some of that stress for you. Well, the VIX looks as though, let me zoom in here. If you look, there's some long shadows above the candles here for the last 5 days. You see these long shadows? 1, 2, 3, 4, and even today we have a longer shadow on top. Now, the VIX rallied today, which caused the S&P to go down, but I still think that by the end of the week, the VIX is going to go lower, and I believe the market will move higher. And I can't give you a guarantee that's going to happen. I'm just telling you that that's the read that I'm getting on the chart. Okay. Now, if you look back, if you want some comfort and some confidence, look back at the times here when we had long shadows on top of the VIX, on the candles here, and even back here. What happened? After these long shadows showed up, the VIX dropped. So I still think, again, we're going to go lower by the end of the week on the VIX. Now, let's hop to the S&P, because they are, like I said before, inversely related. There is an inverse correlation here, and you can see that the S&P touched my support level. I from last week, I left this horizontal line in place because that is called a gap fill support level. Now, 80% of the time after gaps fill, I'm circling that area that I'm referring to as the gap. 80% of the time after gaps fill, the market generally reverses. So here we go. Again, today's low was right on that gap fill support level, and that gives us an 80% chance that the S&P will rally. Now, for the new folks, let me go down here. Let me go to the website. If you are unfamiliar with my gap trading rules, go to themarketguys.com, click on videos right here. Again, I'm addressing the new folks who are on today. And you scroll down, you see, and I have a video right here, Trading the Gap. It'll explain more about what I just mentioned, so I don't have to spend too much time here now today. It's a 6 to 7 minute video, very short, but it's packed with a lot of information. You can make a lot of money trading just the gaps alone using these rules. As long as you use good risk management technique and use stop loss orders, you really can make a lot of money just trading the gaps and even trading these shadows. Okay, so I'm still holding my forecast. I still think we're going to go higher on the S&P. The market was shaken up today. I don't know if you heard the news, the Nissan, the automotive company, Japanese automotive company, Nissan, their chairman was arrested today. Imagine that. I'm like, what the heck is going on with this world? But yeah, he was arrested, and that shook up, that sector. And, he violated some business practice law. And in Japan, that's a big no-no. So he broke the law there. Who knows? He's probably going to be ousted, so there's going to be some confusion there. But let me tell you why, in addition to the technicals, why I think the market is going to rally. The economy is still rip-roaring good. And so the numbers that I referred to earlier, the Black Friday sales numbers and the Cyber Monday sales numbers, that's relatively new. And I even hate to say this because I celebrate Christmas. It's one of the special holidays that our family celebrates. And they've commercialized it so much that they now track people who go shopping, and they put a number on that as a gauge. And it's now become a leading indicator for the markets. I mean, that's how commercialized the holiday has gotten. It's sad. I think it's sad. But what happens is that monitoring the business practices, and it's a lot easier to do this online than it is with the Black Friday numbers, because when people are online, the sales numbers are instantaneous. You know, these companies could report to the reporting agencies, and they basically tally the numbers and they see who's spending money. And I'm already seeing Amazon offering a whole bunch of good deals already on sale items. And so I think that's going to prompt people to go out there and shop. Now, this window, let me quickly go to the diamonds now. We just looked at the spiders. Look at the diamonds, because this is, even though it's only 30 stocks, it's still widely followed. So, you know, when you have 30 stocks that are being tracked versus the Russell 2000, which is tracking 2,000 stocks, the Dow actually has more volatility than the Russell 2000. So if it's a widely followed index, that could trigger other reactions in world markets. Nikkei, the Hang Seng. You could look at the the Canadian markets as well. They're going to follow the U.S. Dow. And so this is an interesting chart, because again, look at today's open. Look at today's close. We closed right on that gap fill support level, very much like the S&P. Now, this is what I'm going to switch to now. This weekly chart. This is going to be the most important chart that I talk about tonight. Okay, and if you have any questions about this, Jeffrey, I'll try to look at Facebook, but you may have to resubmit that, okay? Because that might get washed out. I just happen to see that get entered there. So you might have to retype that in. But let me talk about the Dow. This is a weekly chart. You see this? I'm going to draw a trend line, and I did this. I did this on one of the trade alerts, but I'm going to do it again. If I take this low here and connect it to these and kind of stretch it out to this low back here, which is the low. See this? Look at that low from October 29th. You see that? We are still technically in a bull market. Don't freak out when Cramer starts talking. This is a serious, correction. It's a correction. I wouldn't say it's serious. However, if it drops below this trend line that is anchored by this low from October 29th, then I would call it serious, something that you have to make sure you're paying attention to. But right now, this is an honest correction. We need a correction. We need that to shake out the irrational exuberance from the market. You can't have people just buying at the highs and just expecting it to go higher and higher without a general correction that will, by the way, attract new buyers. Corrections actually attract new money as people who are waiting for these corrections finally see it. It's arrived. Wow, okay, now I could go in and feel good. It's still holding the trend. You'll have new money coming in. Now, here's the things you have to watch out for. This trend line is going to act as a support level. See, you have a support level here, and I'm going to be erasing these lines because I need this chart for next week's market report. Here you have a support level taken from these lows. You have the trend line that is a support level. So the first sign of an actual breakdown that could lead to a meltdown, which again would be serious, the first sign, and this is where the market will actually give you 3 different warnings. It'll give you 3 warning signs. And I promise you, if it does happen and you ignore those signs, you're going to pay for it dearly. We saw this happen in 2007. Many people ignored what was happening, and they took catastrophic hits to their account. And people who were in their 60s back then, it took them 10 years to rebuild their retirement accounts back. Okay, so heed my advice and my my signals here. All right. Make sure you're paying attention to this chart. And by the way, folks, this is where the rubber hits the road. For those of you who are subscribers and follow my trailer, this is why I get paid the money that I get paid and why I charge for trade alerts, because this is gold in the bank if you pay attention to this. Here we have what could be a double top. Now, this high right here, you see this? This high up here is slightly higher than this high. So this is a new high when it occurred. But notice straight down, that high occurred on lower volume than the previous high. All right, so that is a sign of weakness. When you have the volume dropping on a secondary or higher high, that is not extremely bullish. In fact, that's a sign that you got to pay attention as well. But that's not one of the three signs I'm talking about. This caught my attention, believe me, and I reported on it. All right, let me erase that so I don't forget to erase that. All right, now, if the first sign is going to be a breakdown in the trend line, if that happens, you'll most likely see the volume bars start to increase. At that point, you might want to at least start to lighten up on some of your heavier positions. I'm not saying get out totally. I'm just saying you might want to start moving to cash if this trend line breaks, okay? Now, if this secondary support level, remember the trend line's primary support level, if the secondary support level breaks, that is get out, move to cash, but don't panic. Just get out, move to cash. There will be an opportunity to take a short-term buy action after that secondary support level breaks. Because here's how it works. Let me erase this and I'll show you. If this, and again, this is just a possible scenario here. Again, this week I still think we're going higher, but by the new year, we're going to have a different ball game. We're gonna have a different strategy. If this pans out where that trend line is broken, you'll see the volume increase and then it'll quickly decrease because this is stops being triggered. After the stops are triggered, you will see a rebound. I can almost give you a 100% guarantee that you'll see that, okay? In that short amount of time, and I say short amount of time, that could be a month, okay? In this short-term month rally, there's opportunity, especially for the option traders. However, after the trend line is broken and after you see this rebound, which is an attempt to get back up over the trend line, chances are high that it won't get back over the trend line. Chances are this will happen, and I've nicknamed this or labeled this the kiss of death. I know it sounds kind of morbid, but if you took a long position to capture this bounce, but you didn't close your positions and take a profit here and exit all other positions, this is where you're going to start paying for it by holding on and doing nothing. This is where the beginning of catastrophic losses take place, is when people do nothing after this kiss of death has formed. Now, I'm going to give you a test question here. I have to open up my screen. Here's a question, and Ron has a question. Does any of this correction have to do with the past current election? No, I don't think so, actually, Ron, because the market factored that in. And historically, if you follow politics, historically, a sitting president generally loses seats in the House. That's happened every single president going back 12 years. They've lost seats in the House. So the market was not surprised by that. However, the market will be surprised if the president looks like he's under attack and it could be severe. Personally, I don't think they're going to impeach Trump because you need to. I mean, they can impeach him, but they're not going to kick him out of office. They can bring up impeachment charges in Congress, but it's the Senate that will actually kick him out of office. And we know that from looking back at President Clinton. He was impeached, only second president to be impeached, but he was not kicked out of office because the Senate was in his favor. Think of it this way. The Congress are the attorneys who bring up the charges, but the Senate look at them as the judges who sit on the bench. Okay, they're the ones that put a president away. So I think it's highly unlikely they're going to remove this president. But the market will know that. If it looks as though there are all of a sudden serious charges that no one ever expected, the market will be shocked about that, and you could see a trigger low. So hopefully that'll help you, Ron. I've been politically active over the years, but I wouldn't say I'm a political expert. I'm a market analyst, not a political analyst. But I do know enough about politics to know what would affect the market. So take that for what it's worth there, Ron. Okay, so going back to Kiss of Death. At this point, here's my test question. What if, imagine this trend line isn't here, but we have this new higher, a lower high. What would this whole pattern be called if this right side forms that way? Can anyone tell me what that would be? I know there's a little bit of a delay. I know there's enough technical people in here to tell me the answer to that. I'll call it a topping pattern. What would this topping pattern be called if this right side kiss of death occurs? Okay, Paul was the first one. Head and Shoulders. Yes, you're absolutely right. Hey, Paul, thank you so much. By the way, folks, Paul Farley has been an Option Oracle subscriber. I think he was the very first subscriber, and he's still a subscriber. It's over a decade, I know, Paul. Absolute loyal follower. Thank you. And friend, I will say, Paul Farley there. And he's rarely will he miss one of these open house sessions. Neil says a double top. Well, Neil, you could say that here, but if a double top generally would be where you have two highs like this, and then the market just goes into a downtrend without attempting to get back up over the trend line. So I would give you partial credit on that answer. John, I wouldn't call that a cup, that because it would be a topping pattern. A cup and a handle would be more of a bullish pattern. Stuart, you're right. Ken, you're right. All head and shoulders. Okay, so let me go back, put a hold on the test questions there. Let's go back to the analysis. Okay, at this point, this area right here, you have to pay very close attention, as I said, but don't be afraid to take short positions in an effort to make money on the way down. I know most people like to buy things to make money, but if you've never shorted a stock in your life, understand that there are bearish funds out there that you can buy that will be inversely related to the market. So I would encourage you to at least shop in that area instead of, just going out there and shorting a stock. Go out there and look for funds, if you're more comfortable, inversely related funds or bear funds. That is what my plan is going to be. That is what I'm going to be sending out to our subscribers. And my plan is that if this trend line breaks, brace yourself and be ready to make a lot of money on the way down, because you make more money on the way down than you do up. Because what happens is people's emotions are charged, fear starts to kick in, and prices drop pretty quickly, and you can make a lot of money, again, especially for the option traders. Okay, now I have to erase all of these. I got to be careful and erase all the lines, because like I do each and every week, I leave my lines on the chart from the previous week's alert so people can see how accurate the read is. And I got to tell you that the percentage of accuracy is in the high 90s. So not 100%, of course. I don't think anyone is, but it's very high. Okay, now I got two more markets I'm going to look at. Actually, three. Russell 2000, I'll do this briefly. Russell 2000 held support here, although I didn't draw support. It almost gave us a bearish engulfing pattern. It's pretty interesting here. That's almost a bearish engulfing pattern. If it were a bearish engulfing pattern, I would have had to draw a new support level down here, but it didn't. It didn't break down below this low, so I'm not going to draw that low. The Russell 2000 is going to have a harder time rallying than the Dow because the Dow carries less stocks. And the S&P, I think, will be more bullish than the Russell. The Russell 2000 tends to lead the markets, the other indices, that is. So you want to keep an eye on the Russell. What's the other one? The QQQ, the NASDAQ market right here, took a beating today, but still holding the support. It broke down below this support here. This next level support would be for the Qs right around 160. There is still a gap above the market that I think will fill, and I'm going to be so bold to say it will most likely fill by the end of this year. So stay tuned for that. After that gap fills, again, the chemistry of the market is going to shift, and therefore we will also have to shift our strategy from bullish to maybe sideways or bearish. We'll have to see. Okay, what's the last one? We did the spiders, we did the Russell. Okay, we got everything then. All right, so here's the time. And let me see. I have to find the Facebook there for Jeff. Where is it? Okay. All right, start typing in stock symbols because we have 35 minutes. That should be more than enough time for me to get to everyone's stocks and questions. Okay, so Jeffrey says, own Facebook at 12/21/18. You sold puts. Ouch. Okay, what's going to happen on your charts? All right, well, this is one of the FANG stocks that got slammed today. And this one, got to watch out. All right, so you sold the 125 puts for December. That's pretty bold. I don't think you have anything to worry about, though, right now, at least not yet, Jeff. And here's why. In order for me to find the support, let me move this Q&A box over a little bit. In order for me to find support, I have to switch to the weekly chart, okay? And there it is. This, again, why I think you don't have to worry too much. Let's see. I'm going to switch my line to a trend line and price level instead of a trend line. See this high right here, Jeff? I'm going to just drop a horizontal line right there. Bing. You see that? Now, we close below that. Now, that might bring a caution flag, but all right, I'm having fun right now, and I want to have fun by watching everyone else answer this next question. Here we are at support. However, what are some of the bullish signs that we're seeing on this weekly chart? What are some of the bullish signs we're seeing? Can anyone tell me? Anyone tell me? There's a couple of them, actually. Well, I would say volume drop, but the only thing is, Amelia, this is it's a weekly chart, so that volume is only showing from Monday, and even by Friday, it's still going to be lower volume because Thanksgiving is the markets are closed, so it's counting the weekly volume. So that wouldn't be too much a sign. But if it was Friday, I would say yes. But what are some of the other signs? There we go. Lloyd put it in. Stochastics. Look at this. It turned lower today because it went down. But stochastics is at 10.32. Anything below 20 is oversold. And if you look at this weekly chart, every single time it got below 20, it was followed by a major rally in the stock. Now, before you get too excited, I don't think we're going to see a major rally, but I think we're going to see a rally in Facebook because stochastics is just making it so attractive for people that follow that indicator. And the fact that this is a weekly chart. I wouldn't be surprised if Facebook rallies by the end of the week, and then we have a long shadow under that candle that would bring it up back over that support level. Okay, so that's another one. Ken, all right, volume, Ken, right there, stochastics. There it is. Dylan has it. Stale red light. There are 3 weeks of red in a row. And if you go back, Facebook doesn't like going 3 weeks in a row. Back here, look what happened. It went 4 weeks in a row, red, but then the shadows started showing up, hammer pattern, and then it started bottoming out, and then it rallied. You see that? Yeah, Nathan, you're correct. Absolutely. It was pretty much a stale Stale red light. Ken is oversold on got it. You're all right. Absolutely. Now that we see where the support is on the weekly chart, we can go back to the daily chart and talk about another thing that is pretty bullish. This is a gap that's still still left open. Now the big gaps, I don't know if you know this is another gap rule. Larger gaps take longer to fill than shorter gaps down here. See? This one was a gap down. It was a small gap, smaller than this one. And it took, 2 weeks before it started reversing and going back up. Okay. Then once it filled up here, it pulled back a little bit. You see that? So it reversed this a little bit. So I think you're okay. You guys still keep an eye on it. Now, if it looks like it's going to go, addressing Jeffrey with his put still, if it looks like, December's coming along and you are still short the 125 puts, what I would do, Jeffrey, is I would buy back my December 125 puts and I would roll to a lower strike in January, and you might be able to do that for even to give yourself a little bit more breathing room. All right, but then again, pay very close attention to my weekly market reports. I'm not going to be addressing or analyzing Facebook on the weekly market report, but I'm going to be analyzing the markets. And if the NASDAQ looks like it's going to be bearish on my weekly market report, you might want to, again, pay more attention to that and manage the risk accordingly. Okay. All right, here we go. Stuart has GDXJ. Looking for a buy. If you've done this before with me, then please don't just type a stock symbol and type in what your intentions are. Okay, this is gold miners. Now, interestingly enough, NASDAQ, the markets were down big today, but silver was up. I hold a whole bunch of silver. I think I've mentioned that many times because silver doesn't always go directly with the market. In fact, a lot of people look at the precious metals as a safe haven when things start to get a little hairy. So Stuart, it was up because of that. However, you have to watch what's happening here. If you're looking for a buy, I would hold off just a little bit. This is a long shadow up top. It's an inverted hammer that's bearish. The volume is dropping on the way up as price is going up, volume is dropping. That's bearish. You see that? Let me get my trend line back. That's bearish. There's a gap below the market, okay? There's a gap below the market. That is bearish. So let me erase all these lines and let me tell you where I think a good entry point would be. 80% of the time gaps fill. All right, so there's my gap fill support level. 80% of the time gaps fill. In this case, I'm going to tell you, I think there's 100% chance that gap's going to fill and maybe even fill tomorrow or Wednesday. So that gap will most likely fill. High percentage. Remember, it's a small gap, higher chance of filling than a larger gap. Once that gap fills, I think it's going to do that, bounce. So a good entry point would be this high right there. That high is 27.22. I would look to get in at 27.25. Don't try to pick that exact penny of the gap fill point. I would put a buy order in a little bit higher than where the gap fill point would be. And I would feel very, very comfortable owning this one because this is forming what looks to be a W bottom or a double bottom. See this W here? Boom, 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 boom. See? This is the W. It's forming, and this will most likely start to rally. And that's see, this is why I told everyone, get your pens and pads ready, because I wasn't going to bring this one up. Stuart brought this one up, and I think everyone should thank Stuart right now for this suggestion, because this is something I'm definitely going to put on my watch list, and I'm going to do that right now. See my watch list right here? Okay, GDXJ. There it is. It's on my watch list. Thank you, Stuart. And so I'm going to watch that one. I'm probably going to get in there with you on that one. And I'm not going to let that one get away. Now, that's the daily chart. Now, let's take a look at the weekly chart. I always like to look back at that. And it looks, oh, this is interesting. This is getting better and better. This is a huge, huge triangle pattern. Look at this thing. Holy mackerel. And get the apex right. This is beautiful. Now, this is interesting because a triangle pattern is very, very reliable to buy or sell. Now, here's how a triangle works. If it breaks the upper line, it's going to go a lot higher. If it breaks the lower line, it's going to go a lot lower. So therefore, if you're going to buy on that gap fill point, you got to put your stop right below that low. I wouldn't even tell you to trade it unless you could promise me that you're going to put your stop below that low. Because if you buy it at 27.25 and it drops below that low, which is right around, what is that low? I had to move my chart here. That low is, let me see, I got to get the exact number there. That low is 26.04, okay? So I would put $1.25 stop loss, or $1.25 risk per share, $1.50 risk per share if you want to give a little bit more room, and then plug that into the 1% rule. And then I think you'll be safe. I really like that one because the markets start to go lower. People are going to start moving their money into precious metal. ABX is another one. ABX is one that I've made money on. And ABX is forming a more or less a cup here with a possible handle. So any kind of a breakout over these highs is another one that will fit with the Vanek Gold Miners Fund. All these are kind of related, okay? All right, let's go on. D is saying ARRY looking to own. Thank you for that, ARRY. And that is a biopharma company. Look at that. That is a beautiful looking weekly trend. Holy mackerel, that is gorgeous. That is really nice. Now, that's the upward trend. But let me tell you, this is another one you have to be very watchful or mindful of because I'm not going to tell you not to buy it. I'm just going to say once you buy it, this is why it's important to look at the weekly chart. Once you buy it, you better put your stop below that trend line because this is a possible head and shoulder pattern on this with gaps below the market all the way down here at $4. And I would hate for you to buy it at 15, hold on, buy more at 10, have it drop to 6 where you buy more and then you're praying at 4. Right? I don't think that's a good strategy. Put your stop right below that trend line because that looks to me like a very well-pronounced head and shoulders pattern. So this neckline, actually, let me erase all the lines so I could show you where the neckline is. All right? That I would put your area of concern or alert right below that low because this is the neckline right here. You're going to look right there, right around there. See? Here's the left shoulder, and then the trough, head, trough, right shoulder. So if it breaks down below that area right in here, that's trouble for this particular stock. So be really, really careful of that. Again, if you want to buy it, I'm going to go to the daily chart now. All right, and let me see where there is a good support level. I'll put this trend line back for you. So we could now switch to the daily chart and still have that in there. Okay, I would wait for this one because this candle, this red candle today, although it wasn't on higher volume, it was on pretty high volume. It almost beat Friday's volume. So I would say anywhere in this area, and now I can't give you an exact point because you have to wait for the candle, D. If it drops, let's say it drops here, and then all of a sudden you see the volume dropping and there's a long hammer shadow with a hammer pattern, or it drops here and then all of a sudden you see a green bullish engulfing pattern. What you have to do is note where the support levels are and then read your candles to determine where the entry point would be. So here's an area that would be interesting right around 15. If it breaks down below 15, then right around the 1370 area down here would be another area with your stop ultimately down below this low right there. Okay, good stocks. Oh, all right. Ken is looking at the VIX. Now, Ken, are you looking to trade the VIX? Because you just put the symbol there, and I don't see what your interest or idea is there. Let me see, Ken. I'll wait for you to respond on that, Ken, because this system it really lags on. It really lags in the response. Okay, so Ken, the VIX. You could trade it through the VXX. Yeah, there's different ways you could trade. You could trade options and such. The VIX is very reliable because, again, it's a leading indicator, and it's not a stock, so it trades within ranges. So if you're going to read the charts, you have to use your technical skills to determine where the entry points. On the weekly market report, I think that is going to be your best bit of news is waiting on Friday for me to put that out. Some people want me to put it out on Thursday so they could trade on Friday, but then that wouldn't be the end of the week, right? So, but my mentor students, they get to trade on Friday because they're on the phone with me a lot of the times on Friday. So that's if you can, and hopefully that helps you out. All right, John, welcome again. John's looking at Foot Locker, all right? And John, I see that you gave me the symbol, but what is your intention? Okay, Foot Locker has a pretty big red candle. I think it's going to drop a little bit further here. And this is a trading, it looks like it's in a trading channel here. I'm going to even go so far to these highs up here. This is a nice stock. This is a nice stock to trade, but I wouldn't be getting involved in it right now. Number one, the volume is almost higher than it was on Friday on that big red candle. That's a big red candle. The reason I wouldn't get in yet is because that stochastic is really showing some downward momentum. So I would wait for the stochastic, the K line here, which is the blue line, or wait for the K line to start to move up. I wouldn't say you have to wait for it to cross the signal line, which is the D line. I wouldn't say wait for that, but I would definitely wait for the K line, the blue line, to start going up before you get in. And because this is a trading channel, I would put your stop somewhere below here, or if you, let's say you buy it at, it gets down to 46, there's nothing wrong with putting a $2 loss per share. You know, so if you buy at 46, put your stop at 44, and now you're below both of these lows, the support level and that low. So hopefully that helps you out. Parama, welcome. NVIDIA, again, I don't see if it'll help me help you better if you could tell me what you're planning to do on this one. Right now, this would be wait and just watch. There's nothing you could do at this point right now until you see the volume drop. I think the reason you can't do anything right now is because this candle, you don't see this too often. This is bad news for this stock. This is almost 100% guaranteed tomorrow it's going to be lower. Almost 100% guarantee. So if you ever wind up owning a stock and you see that kind of a candle, get out before the close. Because with no shadows, it means it opened on the high, closed on the low. Look at the intraday daily chart. You'll see what I'm talking about. There it is. Boom. It opened here. It closed here. And, oh, look at that. And after hours, it went even lower. It went to 142. So it's dropped another $2 after the close. And so there's bad news out on the stock. But doesn't mean you can't, trade it eventually, right? What you want to do is you want to go back and look at the weekly chart now. Let me erase all these lines because these are my former forecast lines here. See how nice that was? That was really nice forecast there. Okay, let me get rid of all these lines to clean it up. Now, what do I have to do? Because there is no support on this chart, right? This is 12 months. There is no lower low than what we're seeing here. So I have to back up the chart. We call this 3D charting. I have to back up the chart in order for me to find a support level. The only support level I see is here, which would be a role reversal support level. So there is a chance this stock could get down to around 120, 125 before it finds support. And with the way this one's moving, I say there is a chance it could do that. So be very, very careful, okay? Look at the end of cryptocurrency boom hurts NVIDIA. That's why what's happening. By the way, folks, I have on my Facebook page, I've been forecasting the Bitcoin market, the Bitcoin index. This is a perfect example. Remember, I talked about the trading triangle, right? When Bitcoin was up here, I was putting, for those of you who were following me back then, I was putting very stern warnings out there because this is a bearish engulfing pattern I haven't seen in years. And people, I heard of a woman in Canada who literally second mortgaged her house, which was completely paid for, and put everything in Bitcoin right here. See where my cursor is? Right there, 18,000. She sold, she took all the equity out of her house and bought Bitcoin with it. Look where it is now, down around 5,000. I kept warning people, this was a very, very bad hype bubble. And everyone, they were getting mad at me because they blamed me for I'm the reason why Bitcoin failed. No, that's not the reason. The Bitcoin failed because it had a bubble. There's hype in it. There's gaps everywhere. But getting back to my triangle, look, on this week right there, that's the week of October 8th, it broke down below the bottom triangle line. Now, what's happening? This doesn't look like much of a move, but that's a 2,000-point drop. 2,000 points it dropped when it broke down below that support level. That's how powerful triangles are. So I would be really careful with NVIDIA. I tell you, I think there's better stocks out there right now. If you're an option trader, maybe you could take some chance and wait for it to hit that support level and maybe buy some leaps or put in some kind of a spread. But I still think this one could drop another $24 before it's going to find support. So be really careful with that one. All right, Philip, I'm going to try. Oh, we still have 13 minutes. We can get through everyone's symbols. Okay, this is good. I'll just try to speed it up a little bit if you're okay with that. Apple, I don't see one of our followers asked me about Apple, and I don't know if she put on the bear spread, but hope she did. I'm not going to mention her name to protect her privacy, but we were talking about putting on a bearish spread for Apple, and again, I hope she did. All right, so Phil, this is your stock. You say, reading your notes here, it says no current position, looking to sell cash-protected puts. Sell cash-protected puts to purchase Apple at a low price. Be very, very careful about selling puts, cash secured in such a high-priced stock, okay? Because, number one, you're going to have to put up that cash, which means you can't use it. So you're going to put it into what's called the T6 side of your account. It's a special side for margin where you pledge the money, and that's to secure your purchase if you're held to the purchase, but you can't use it for anything else. Here's why you have to be really careful with Apple, all right? It's almost right on its trend line. And this is a weekly chart, okay? And look at the candles. It's accelerating. This was a long shadow last week, but it didn't bounce off of that shadow. So you got to be really careful. If you're thinking about selling the 180 puts, I think that's too close. I really do. What I would say is if you see a bounce off of the support level, which is the trend line, then I would feel better. But then I wouldn't go any further out than January on that. And then be mindful of that as a get out point, because if you sell the puts and it breaks down below that trend line, we could see a kiss of death in Apple, like we talked about the major markets. And so you don't want to get caught in that. I've seen a lot of people lose money because they were trying to pick a bottom in a stock that was still falling. And what do we call that? That's trying to catch the falling knife. Be careful of that. Be very, very careful. I like your idea, but just make sure you're using good risk management strategy with that. Okay, Ron is looking at BYD, worth entry at this time. All right, let's take a look at this one. I'm going to stay on the weekly chart, okay, as we look at this BYD. This is another one that's taken a beating. And, you know, here's the triangle. Look at that. It's amazing. There it is. There was the triangle back here. You see that? Broke down below the bottom triangle line, and bam, it got pounced. Now you have to watch for support. The only support that I see, let me clear out the triangle lines. The only support is this roll reversal back here that is close to. So this stock could still drop to around 22. Now that's the weekly chart. Let's go to the daily chart and see if there's any other signs that lead me to believe this is over with. No, it still looks bearish. Stochastic started turning lower again today. So you got to wait for stochastics to start going up. Here's a good one for you. Use the old Jim Rawbuck strategy. Okay, Ron, if you're thinking about this, Jim Rawbuck, he was on my television show many years ago. He was the Zen of market timers. He was one of the world's best market forecasters, and he used just the 20-period moving average, and that's why I use it, because Jim, way back when, told me he used it, and it worked. Notice how the 20-period moving average is acting as resistance. There is no wide divergence. It's just following that. It's going down. What I would say is wait with patience and buy it as soon as it closes over the 20-period moving average. That's your best bet. Don't try to pick that bottom in a stock that's still falling. I would wait for that to go. And I'm telling you, it's worth the wait if you get up over that 20-period moving average and then start to buy it there. The odds will be in your favor if you do it. And then once it gets over the 20-period moving average and you buy it, use the 20-period moving average as your stop loss area, okay? That's what you're going to do. All right, Bruce, welcome. You're a regular. Thank you. Okay, we're looking at Visa. And Bruce submits this and is a good entry point for Visa. Now, notice there's a pattern here. I don't know how many of you picked up on this. I haven't had too many people ask me about shorting anything. We're still looking to buy, and that could be dangerous. Remember, if we start seeing the market roll over at the beginning of the year, be very careful. Here is the trend line. Boom. We have a lower high. See that? The moving average is still turning lower. Stochastics is still going lower. The volume is increasing on the way down. I don't see anything good about this at all. The only thing I could tell you is that you have to wait for, number one, wait for the volume to drop. Number two, wait for the stock to hit a key support level. Here's what we call flatline support. It's horizontal, not a support driven by a trend line. Flatline is support. You could even go so far and say this was a roll reversal or close to a roll reversal support. That's a strong one. So if you see it come down here, volume drops and then starts to pivot, and then you see stochastics go up, boom, buy it. That's when I would buy it, but not now. Now is not the time for that one. All right, John submits another one. Bought, hoping Friday or Monday will go up. Now, John, did you buy AT&T? Is that what you're looking at, T? Okay. Bought it at 48. I see a T. Is that what you were referring to, AT&T, the ticker symbol, or did I get that wrong? All right. Well, AT&T doesn't look that bad, actually. If that's not the one you're referring to, then we stumbled on this one. AT&T, the volume is dropping as the stock is dropping. That's bullish. We have very close to a doji. Oh, it is a doji right there. That's a sign of a pivot point. Stochastic looks like it wants to go up. But this one, I would wait for it to close over the 20-period moving average for a short, quick trade to fill that gap at 32. Then I would just get out. Take your $2, your $2 profit on a $30 stock and run. Run for the hills. If you want to play options, you get a little bit more leverage on that one. Okay, going quickly. Thank you for that, John. Unless I missed it. Okay, historically Footlocker. Okay, that's another one. All right, so I lost my track. See, it's starting to wash away with people putting them in. Let's see. I left off with John and T. And let's see. Oh, here we go. Hey, Sandal. I hope I'm pronouncing your name correctly. If I messed that up, please forgive me. Okay, looking at CNQ, no interest on the long side or short? Do you have anything? I could just give you my CNQ. Let's see what that looks like. That is Canadian Natural Resources Limited. That one actually looks pretty good today, considering, here's something to point out. When you have the Dow Jones Industrial Average dropping the way it did today, okay, and the TSX dropping, when you have the Dow down 400 points, and you're looking at a stock that was up on a day like today, I would say that's a sign of strength, right? That's a definite sign of strength. This is a pretty affordable stock, and I think that this one could be pivoting higher. Stochastics is turning. Volume is up on that green candle, so that's bullish. You got a gap above the market. That's bullish. You got a potential $2 profit on that gap fill point. One thing missing here, I got to go to the weekly chart to see if there's any major support. And, yeah, it's pretty good. This is a roll reversal back here. Let's see where that is. Close to roll reversal. You could definitely say this is a support level. I'll take this one better. All right, so here's what you do. If you wind up buying that one on a pivot point, let's say you buy it at 27.5. I know this sounds like a wide risk per share, but a stock like this, you should use a $3 risk per share. Now, granted, it means that you'll buy less shares, but you're giving that stock room to go down and maybe even violate that support just a little bit. If you use the 1% rule, and for those of you that don't know my 1% rule, I'm not going to go over it now. Right here, you go to that video page, and there is the 1% rule right here, the 1% rule for managing risk. Please go over that and understand how to use the risk per share in the calculation. Okay, that will apply to this stock as well. Okay, look at, 3 minutes left. All right, let's see. Who's left? All right, I'm going to go Rick. Forgive me, Ron. We covered a couple for you, so I'm going to go to Rick here. I don't think I got Rick. RARX. This will be the last one for tonight. Rick bought it at $12.89. Beautiful buy. That's beautiful. That's a weekly chart. Here's some good news for you. Stock is up, even though it's 2 cents. It's not down, right? This is a very long-term cup and handle. Look at that, Rick. Here's the cup. It's forming a handle here. Any kind of a breakout over this line right here, which is right around 1846. I know you still got a little room to go on the upside, but any breakout over that thing could storm the 26 on a cup and handle like that. But you want to know, let's see, you bought it at $12.89. You got stopped out today, $15.89. Nice profit. Looking to get back in because of the hammer today. All right. I didn't read the rest of your message there. Sorry about that. I'm celebrating your success. But, hey, you made some nice money on that. All right. Actually, I'm glad you got stopped out because on a daily chart, this is a different look. remember, we were looking all celebrating at this cup and handle, but look at the daily chart, different picture. Stochastic is overbought. Volume is dropping on the way up. You got that little shadow. It's almost a hanging man. I would say you got a stale green light here. This stock is probably going to do this. Boom, boom. So set a price alert for 14. I'm going to say a little bit higher than the moving average. So set your price alert for 1470. 1470. Look at the candle. If it looks like it's forming a pivot point bounce off of that moving average, there's your entry point with a stop loss order right below the 20 period moving average. It looks as though you're good at setting stops. So I must congratulate you on that, number one, and end this presentation on that good note, as Rick is the example for using stops to manage our risk and protect profits. Folks, I had a good time tonight. That hour went very quick. But going back to my my weekly chart of the diamonds I'm referring to, I'm not going to go back to it. I really cannot stress or overstress the importance of following that trend line and making sure you're moving to cash. Because, listen, people who follow me are not long-term buy-hold investors. People who follow me are swing traders. Yes, some are investors who mix it up, but are getting in and out of stocks when they need to, in managing risk. But this is not a time. We could. I don't want to be the wet blanket on in this party, but we could be saying so long to the most incredible bull market of my lifetime. This is the longest bull market we've had. And every single bull market has ended eventually and followed by a bear market. Don't fear that. Prepare for it. Get ready for it. And more importantly, learn how to make money on the way down. This bull market, if it is coming to an end, this bull market is coming to an end with more bearish ETFs available to us than any other bull market in history. The last big major bull market didn't have anywhere near the number of bearish instruments that we have today. So just learn how to shift your mindset from bullish to bearish and attack the market while it's going down, and you're going to do just fine. So we went 2 minutes over. Hope you're okay with that. For our members, we have this going to be recorded and archived in our member page. If you want to grab that and listen to it again to take better notes, that's up to you. But I have had a good time tonight. Happy Thanksgiving to everyone. Eat lots of turkey, and we'll talk to you next time. So long. Bye-bye.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.